Hello everyone, welcome back with me. Don't forget to like, comment, share, and subscribe. Wall Street leaders after BOFA result United Kingdom reversal. New York readers United States stocks kicked off the trading week on Monday with a rally after Britain received course on an economic plan, while Bank of America was the latest financial company to post solid quarterly result, which left optimism about the corporate earnings season. Britain named Jeremy Hunt finance minister, and he immediately dispelled many of Prime Minister Liz Truss's fiscal measures, which had unnerved markets in recent weeks. Bank of America Corp NYSE BAC shares surged 6.06 plus as the lender net interest income was buoyed by rising interest rates in the quarter, even though it added $378 million to its loan loss reserve, but buttressed against a softening economy. Fellow Financial Bank of New York Mellon NYSE BK Corp also benefits from higher interest rates, and its shares climbed 5.08%. Overall, higher rates boost interest incomes for lenders in the third quarter, giving investors hope the current earnings season will be able to hurdle a lower bar of expectation. The earnings growth estimate for the quarter is 3%, according to Revitive data, down from 4.5% at the start of the month and 11.1% on July 1. In a fragile market like this, any type of good news in the margin can go a long way, said Emily Rowland, CEO Chief Investment Strategist at John Hancock Investment Management in Boston. There's better sentiment ground what is happening in the United Kingdom. Financial earnings are being supported by a number of factors, whether net interest margins are one key element. Higher rates are going to be good for the banks, so Q3 earnings are looking a little less bad than feared. I would put it maybe not necessarily better than feared. The S&P 500 banks index is up 3.48%, while each of the two major S&P 500 sectors were higher. The Dow Jones Industrial Average rose 550.99 points or 1.86% to 30,185.82. The S&P 500 gains 94.88 points or 2.65% to 3,672.95, and the Nasdaq Composite at 303,540 points. The United States equities remain in a bear market after struggling throughout September, historically a tough month. Analysts said to better stock valuation, entering what is traditionally a stronger period for stocks were also supporting Monday's rally. Aggressive reserve interest rates could be a stumbling block tough. Right now, the Fed owns the market. Fed policy is the key driver. They are implementing the most aggressive tightening in the shortest amount of time that we have seen in our generation, and it's important to remember that Fed policy it works with said Rowland. Data on manufacturing in the New York region was weaker than expected, adding fuel to expectation of pivot by the Fed may be on the horizon. Higher rates are going to be good for the banks, so Q3 earnings are looking a little less bad than feared. I would put it maybe not necessarily better than feared. The S&P 500 banks index is up 3.48%, while each of the two major S&P 500 sectors were higher. The Dow Jones Industrial Average rose 550.99 points or 1.86% to 30,185 94.82. The S&P 500 gains 94.88 points or 2.65% to 3,672.95, and the Nasdaq Composite at 3,540 and 41 points. I think that's all from me. Thank you for watching. Don't forget to like, comment, share, and subscribe.